And straight away that candle hit our take profit level. You can already start to see some of the differences when you trade Asian session, London or New York. Basically, Asian session has less volatility in the market, but London session has a bit more, and so does New York session, meaning you could be out of your trade literally in one candle push on a 15-minute time frame. Hello guys and girls, and welcome back. It's your boy Big John. The at's at the bottom of the screen if you'd like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today what I'm going to be showing you is how you can catch 20 pips a day trading gold. Now, I know a lot of people have shown you a compound chart and how you can grow your account, but today I'm actually going to show you a viable strategy on how you can do this also. And don't forget, if you want to get into the one-time fee VIP group, you can just watch the link that's posted above. And if you want to make payment, all the links will be below in the description. With all of that being said, guys and girls, let's get straight onto the video.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.
Okay guys and girls, so what you can see right now is I'm in TradingView, and if you want to get coins on TradingView to lower your monthly payment, you can go into my description below. There will be a link and you can purchase your TradingView monthly payment plan with that link, and you will get some referral coins. First and foremost, we are on gold, the 15-minute time frame. This is a 15-minute trading strategy just so you can have a good enough range when entering your trades in terms of stop loss and take profit. The next thing you want to do is add the FXN indicator onto your chart, and this is the FXN Asian range indicator. This will be linked in the description below as well, and you can just look at my settings here. What we're going to be paying attention to here is just when the market breaks structure on the 15-minute time frame, and we're going to be looking for entries based on that with a 1-to-2 risk to reward ratio. I have shown you in a video before about market structure. Again, that will be in the description below. It's a 30-minute full course which will help you to understand what break of structure means in the market and how you can establish when to get into a trade and when not to. Right now I'm starting from Monday, that's the beginning of this week, on gold, and I have marked out all the areas as you can see over here. That will make this process a lot quicker. Our main focus with this whole setup is to make sure you pick a session that's good for you to trade. There is Asian session, London session, or New York. There will be some differences between the sessions in terms of volatility, but make sure you find one that's good for you, and when you back test what works for you, on average a lot better. So you can see right over here with this break of structure on this candle here, we would have been entering the market on the next candle that appears. So that was our entry candle, and this trade actually lost after our entry candle here because we could see what happened straight away over there. Now the market broke structure here. Let's see if this is a winning trade. And we can see the market did actually hit our 20 pip TP right over here. If your spread on your broker is wide, that might have hit your stop loss, but for now we can see this was a winning trade setup. And right over here we had another break of structure, and this one had no pullback, and straight away we had a winning trade. We had a break of structure with this engulfing bearish candle in London session here, and we would have entered the market on this next candle, but this one did hit our stop loss. Then this candle did break back through this level of structure here, and we would have entered on the next candle here. And within these two candles, it actually did hit our take profit. The market broke structure with this candle over here in New York session, and we would have entered on the next candle that does appear. And straight away that candle hit our take profit level. You can already start to see some of the differences when you trade Asian session, London or New York. Basically, Asian session has less volatility in the market, but London session has a bit more, and so does New York session, meaning you could be out of your trade literally in one candle push on a 15-minute time frame. And we had another break of structure right over here in the market, meaning that we would have entered on this candle here, and straight away that one candle hit our take profit level. So on Tuesday Asian session, we had a break of structure on this candle. We would have entered on this candle, and that was a winning trade. We had another break of structure over here with this candle. Let's just see if this is a winning trade. And yes, we would have won this trade also. We could see there was a break of structure here. We would have got into the market on this candle over here. And yes, this was another winning trade in London session on Tuesday. We had a break of structure right over here in the market, as you can see here. And we would have entered on this candle, but unfortunately, this would have been a stop loss here with this candle or this candle here. We had another break of structure coming back down from this level with this candle here. And we would have entered on the next candle that appears. And the next candle would have hit our stop loss. And then we had another entry right over here. So why did we enter again here? Remember, the break of structure levels here telling us that structure is still going to the downside. Even though this was a losing candle, it did close bearish. So it did give us an indication that the market could still be pushing to the downside. So we would have entered on this candle over here. And let's see if it hits our take profit. And yes, the next candle pretty much hit our take profit level. And again, it would have been very close as it did push up first. It's only a matter of how big your spread was. So this probably went about 9.7. And if your spread was too big, you would have got taken out of that trade. But it did actually go on to hit a take profit level. So that would have all been based on what your broker does for you in terms of spread. Now we had a break of structure with this candle over here. Let's see what actually happens. So this one almost went to your take profit level, but it didn't actually hit it. That's depending on whether you closed this trade or not. You was very close to the close of market, so you might have actually closed that trade just beforehand. But again, that was down to your decision and your discretion during your trade management. This candle here broke structure right over here. We would be entering on the next candle that does appear. And there you go. This candle here actually made sure that we hit our take profit level. Not only did it do that, it also broke another level of structure in the market up here. And we would have been entering on this bearish candle, which you can see straight away already hit our stop loss. The market broke structure over here, and we would be entering on this candle that opened here. Now, when that candle went bearish, we would have actually lost this trade, unfortunately. And you can see when the market broke structure up here, we would have entered on this candle. But again, we would have lost this trade here because it actually did hit our stop loss. And even though this one hit our stop loss, remember the candle did close bullish, and we're waiting to see if the market was going to break structure back down to the downside here, which it didn't. It still continued to go bullish. So when this candle closed, we would have entered on this candle here, and it did actually hit our stop loss again. But then because it still remained to be bullish, we would have entered on this candle here, and this one actually hit our take profit level without hitting our stop loss. We can see a break of structure right over here in the market, and then we would have entered on this candle right here. And that was very close to our take profit, but it didn't actually hit. We saw a break of structure right over here in the market. We would have entered on this candle. Let's see if it hits our take profit. Nope. So we had a stop loss hit there. We have a break of structure right over here in the market. We would have entered on this candle over here. And of course, that would have been a losing trade. We also have a break of structure with this same losing candle right over here in the market. Let's see what happens on this next candle. And we would have won that trade there. As the market is still respecting this break of structure level, and notice it didn't go above this level here with this candle, we would have been entering when this candle closed to see what happens. And of course, this candle hit our take profit level. And this candle here did actually break structure. So we would have been entering on this candle, but there was a pullback and we would have lost that trade. But it did close bullish, so we would still be entering on the next candle. And this candle here, even though it closed bearish, it actually bought up and hit our take profit first. Then it pulled back bearish and closed bearish. So this would have been a winning trade. And that's pretty much it. So you can see the basis of how to trade this. It's not incredibly complicated. It's just something you've got to get used to in terms of working out where the market's actually breaking structure. I have made videos before on fractal points, so you can use the William fractals that can help you see market structure breaks. I will also link that video in the description below. And if you've got any questions on this, you can also join my Discord. It would be best to join the one-time fee group, because then you will be able to speak to me about something like this in the mentorship videos that I do every single Sunday, where I go over market analysis and I also teach you other things I'm doing in the market to help you trade. I personally swing trade myself a lot, but I always use break of structures in the market and I trade retest on the higher time frames. It does not mean that it's not relevant on any of the lower time frames. It's relevant on all time frames. So don't forget to like, comment, share, subscribe, guys and girls. And if you do want to get into any of my services, again, just hit me up in Telegram or Discord. It is your boy Big John and I'm out. Peace.
Started from the bottom like Drake. Got that young moolah, but I learned my mistakes. Climbing up the ladder, gotta watch out for the snakes. If you wanna be the boss, then you have to delegate.